My name is Thusang Mahlangu. I'm the CEO of AGCS in Africa. I will be today conducting the order of events, and also I'll be sharing with you a few highlights of our Allianz Risk Barometer. Firstly, I would like to welcome our special guests. We have a special guest, our Chief Economist, Ludovic Subran, and we also have Dr. Celine. We have Senzin Lozi and also Afayao. But firstly, a little bit about Allianz. Allianz is one of the largest insurers in the world, and we have over 100 million customers. We operate in more than 70 countries. We provide a broad range of personal and corporate insurance services, ranging from property, life, health, assistance services, credit insurance, and of course, global insurance business. We released our results this past Friday for 2020, and they were excellent results. We achieved a record profits and revenues, 140 billion in revenues, profits of 10.8 billion under difficult conditions, as you know, in 2020. We have over 150,000 employees worldwide, and in Africa, we've been on the continent since 1912. So we've been doing business on the African continent for over 100 years. And if we combine all the income that we do on the African continent, it's over €500 million. Now, moving quickly to our agenda this morning, like I mentioned earlier, we have a great lineup of speakers. We have what I call the Rolls Royce of speakers. Our Allianz Chief Economist, Ludovic Sobran, is joining us all the way from Paris, France. And also he is accompanied by our own economist as well, Celine, Dr. Celine Ozet, dialing in from Paris. They will be followed by Senzile Ndlozi. Senzi is our head of business development for AGCS in Africa, and also Afayao, who is from Cote d'Ivoire, but is joining us from Nairobi, Kenya, who is the chief underwriting reinsurance officer for Allianz Africa. And I hope that the technology works, and we're working in the digital world, and I hope it doesn't fail us this morning. The last 20 minutes of this morning or this afternoon, the last 20 minutes of our webinar will be a panel discussion. I will moderate that, so please do use the Q&A function. So if you look on the right-hand side of your screen or bottom right, you will see a Q&A function. So we'll only cover the questions at the end of the seminar, not during while the speakers are talking. So if you can do while they're talking, you can still pose your questions, but we'll not cover the questions immediately. Please be patient with us so that we can cover all your burning questions at the end of the webinar. And I look forward to be moderating that session for you. Now, first up is Ludovic Subran, who will be providing a global perspective on this topic. But before he goes on live and before he starts speaking, I was going to give you a brief CV. I had to shorten it because it's quite long, so we had to really shorten it. And Ludovic is our chief economist of Allianz. He's also the chief economist of our credit insurer, Euler Hermes, and he heads up economic research for both organizations. Prior to joining the private sector, Ludovic worked for the World Bank, the United Nations Food Program, and the National Institute of Statistics and Economic Studies. Ludovic teaches economics at the HEC Business School and Sciences in Paris. He's also been recognized as one of the young global leaders of the World Economic Forum, ranked by the Institut Toussaint and Le Figaro as one of the 100 French leaders of tomorrow. As a foreign trade advisor, Ludovic sits on several boards and advisory boards. He's written and contributed to numerous books, and he's a statistics and economics graduate. He's ranked one of the top 100 most influential economists in the world, and he's recently been appointed to the Council of Economists to the Prime Minister in France. Ladies and gentlemen, it is a great pleasure to welcome on your screens Ludovic Subran. Over to you, Ludovic.
Thank you, Thusang, and remind me to ask you to send me the CV that you have for me so that I can use it, for my personal life also to date. I think it's a very good one. So good morning, good afternoon, everybody. It's really my pleasure to be here today. So we're going to talk about the global COVID-19 economics, and Celine will talk more specifically about Africa. So if I go to the first slide, the main first message that I want to convey today is that for at least the entire year 2021, the holy trinity of pandemic statistics will continue to decide on growth. What I mean by this is that new cases, the stringency of lockdowns, but also the vaccination rate is something that's going to stick with us and determine the growth shape and speed and quality around the world for at least the next 9 months. Why is this important? Because this is the big lesson that I learned from 2020, is that if you put 5 epidemiologists in one room, you have 13 views, which is worse than if you put 5 economists in one room. You usually have 7 or 8 views. So epidemiologists are worse than us. And so this is creating a lot of uncertainty to do business, uncertainty about how to use your savings, uncertainty to trade, and uncertainty for policymakers. And the first message I want to give is this one, is the one about the good news, the light at the end of the tunnel that financial markets have priced in, which is that there is a vaccine and it is working. I know our brothers and sisters from South Africa are particularly affected by the new phase of COVID-19. And we see now also that some vaccines are working better than others against the variant. So it's something that will continue to be very important. One thing that I have on this slide is that it will take us a long time to vaccinate. For example, in Europe, we are vaccinated 4 times slower than in the UK or in the US. If we want to meet the targets that policymakers put forward, we have to vaccinate 6 times faster. It is costing us something in the tune of 100 billion euros since the beginning of the year to have this delay of vaccination. What I want to say is it also works for Africa. I believe that last year, the world joined to make sure that some of the debt arrears were canceled for African economies, to make sure that policymakers had room to maneuver. But we didn't solve the one big issue, which is that vaccination is the highest return investment in 2021. You can do anything. You can give money to families, you can give money to children, you can build roads, bridges, you can do whatever you want. What is the best investment in 2021 is vaccinating people, because this helps avoid locking down the country. If I just think about South Africa again here, South Africa has a big commodity sector and a big service sector. Both of them have been very affected by COVID. Commodities through trade, and the fact that only Asia now is functioning, that Europe will only function back to pre-crisis level by 2022, is a big hindrance to commodities and the commodity sector in general in Africa, but in particular in South Africa. And services, just imagine, COVID-19 is a service crisis. So we see a lot of shops closed, and this is having an effect on livelihoods, but also on consumption in a lot of the countries. So what I think is very important now is to see how we're going to deal with vaccination going forward, and how can we agree that vaccination is a global public good, including by making sure that it is available and accessible and affordable, including for our for African markets. You see here on this slide, for example, that the advanced economies have hoarded vaccine. So it's a form of vaccine nationalism. And as a result, it is harder to access vaccines for some of the large emerging markets. And this affects, of course, the prospects for Africa, where 2021 will be a bit harder without China, without tourism boost and so forth. So this, for me, is the big question of the next 6 months, is what type of vaccination campaign can we master and deliver in Africa, because this will give a bit the flavor of the growth for the continent, knowing that on average, the continent has been less affected than the rest of the world for reasons that epidemiologists still have to agree upon. But I don't think that this situation will stay the same. I think, as the world reopens, we will need to make sure that African countries will also have complete access to vaccine, to avoid that they have a delayed wave, which could kill growth, in 2021 or 2022, when other economies are reopening. On the next slide, you see, the growth numbers. So this is to do forecasts. Basically the main message here is China is already back on track. China is back to pre-crisis level. China has actually gained 2 years of competitiveness by being first in, first out. Asia and the East in general, by doing localized quarantine, is actually on very good track. So we see all the countries in Asia actually doing much better than the West. The US should get much better by the end of this year, especially because of the massive stimulus that President Biden is trying to pass Congress. If you add the 1.9 trillion that President Biden wants to pass in 2021, on top of the December stimulus, on top of the CARES Act, the total stimulus for the US in fiscal terms is close to 25% of GDP. And then you add to this what the Fed has done to make sure that financing conditions are good, which is actually also working very well for Africa, especially because it has maintained currencies. In most countries, because monetary and financial conditions for those countries in Africa that have dollar-denominated debt they've been quite good conditions so far. So the US is back, and then Europe is lagging behind. Europe is basically only going back to crisis level by 2022. It's a very tough year ahead for Europe, very politically charged, elections in Germany, political crisis in Italy, political crisis in the Netherlands, of course, managing Brexit. So it's a bit of a make it or break it year for Europe, also because, we decided to pool resources to vaccinate, which is something that, we could talk about in the Q&A, whether Africa should also do the same in the realm of the zone. Also some of the efforts for Pan-African public goods. But for Europe, I think what is important for exporters that are listening to us or people that have activities in Europe is that Europe has done a lot of things. The ECB, the European Central Bank, and the Ministries of Finance have done a lot, but I expect them to do more because we have a lot of heterogeneity. So the situation is very different from one country to the other, and a lot of questions are now appearing. When the tide goes down, you realize who is swimming naked, and that goes for corporates that have got a lot of help and that are now super indebted, but also for some countries for which their credibility when it comes to fiscal trajectory is at stake. And I'm sure Celine will talk about that, about how the international investors are looking into the credibility of the forward guidance on fiscal policy for the big African markets. If I go to the next slide, the third message is, what really matters in COVID-19 economics is how much of the savings you've accrued because you didn't go to restaurants, you didn't travel, you didn't necessarily buy as many things as you would have because you were a bit concerned. How much of that is going to become consumption? And this unleashing of excess savings is really the crux of the recovery in 2021. We believe that 25% of the savings that people have accrued in different ways because they were limited in their social spend will come to be spent in 2021. And that goes for the US, Europe, and to some extent to a lot of the countries in Africa. So the consumer will decide on the recovery. The consumer will decide also on how much this, the confidence is there to spend even more than the 25% that we just discussed. So basically, what is very important across the world, but especially on the African continent, is the political elections that could actually make people be a bit more concerned about the future of their jobs, of their social protection, of the confinement, the stop and goes that we see in some countries. And this is what makes more or less consumption. This is what makes more or less investments. This is what makes more or less growth. And so building everything to make sure that consumption and confidence are there is of the utmost importance in rebuilding the COVID-19 world. If you go to the next slide. Maybe a word on trade, because I just mentioned the free trade zone in Africa, which I think is a massive institutional breakthrough. The good news from this crisis compared to the 2008-2009 crisis is because we don't have a financial crisis on top of the health and economic crisis. Trade has rebounded, especially trade in goods have rebounded already to pre-crisis level. Trade has rebounded twice as fast as in 2010 and from the 2008-2009 crisis. So it means that, and you see that the manufacturing sector in particular it has a lot of tailwinds. It also means that we see a lot of risks of shortages. We see Chinese exporters hoarding a lot. So you start to see this reflationary pressure on imported goods. or delays if they are not coming from higher prices. And this is a bit of the concern. So trade is back, especially in goods. In services, not so much. It's a bit harder, especially because tourism is still, a bit in a difficult situation, and it won't go back to pre-crisis level before 2024. But then the question now is, if you look at the rebound in 2020 on the right-hand chart, the right-hand side of the chart, from minus 12% to plus 10.5%, this is not a easy normalization. This is very bumpy because we're going to have to be faced with, shortages. We see that already in semiconductors. We're going to see a lot more pressure on commodity prices, rare earth. We're going to see a lot of hoarding. And we are on, trade is still happening on the back of the Trump US-China rivalry, which has not receded. So this creates for us a bit of a concern, especially for large countries in Africa that are importing, whether it could create a bit more disruption on the supply chain. And this is something that, we are working very closely with the AGCS team to understand what type of products, how can we help, and how can we help at least map the risk better, so that it is something that we help manage as the situation is going to be for the next year or so. A bit critical in some sectors, especially in manufacturing, because it is really the sector that rebounded the fastest. And to a certain extent, I hope that maybe these trade disruption are going to also create more push for regional supply chain. Without too much protectionism, which is the other big risk, and maybe also for ESG. We did a survey last December and we asked companies, are you intending to reshore? And they said no. Only 1 out of 10 companies told us, yes, we're going to reshore because now we're afraid of the Chinese, right? Or the dependence on China. But then when we asked them, what did you do because of COVID? And 50% of them took hedging measures, diversifying suppliers, working a lot more with insurance carriers, but also to some extent, some of them started to tell us, we're going to try to reduce our carbon footprint and we're going to try to make our supply chains a bit more efficient, which is something that will certainly reshuffle a bit the cards of global trade in the world post-COVID. I don't think it is a question of deglobalization, quite the contrary, but I think it's going to be a bit of a tough time, especially for countries that are too dependent on certain large providers. If you go to the next slide. The other big thing that is important to understand is that COVID-19, because it's a once-in-a-century shock, or so I hope, has created a once-in-a-century type of reaction from a lot of policymakers. So on the monetary side, the big central banks have decided to go big. And this is quite surprising because this is unprecedented in type of magnitude. This is welcome. This helped avoid this second wave, which is a financial crisis and maybe certainly a social crisis out of it. But it creates new externalities. It creates new questions. How do you normalize for this level? What type of inflation risk do you have down the road because you injected so much liquidity? You see already in the US over the past week, everybody is very concerned about this steepening of the yield curve, right? So the fact that bonds in the US are repricing very fast because they're pricing in this inflation risk premium. This is something that we're going to have to live with for quite some time. Also, the divergence between the US and the rest of the world, the risk of a taper tantrum. You remember, in Africa, how much the shilling, the naira, the rand lost in 2013 when the Fed started to talk about unwinding its balance sheet and then hiking rates. So this is, the 2021 risk of tantrum is something that we need to continue to monitor because this could cost a bit of derailing on the currencies in some of the emerging markets that are currently benefiting so much from the very good monetary policy. If you go on the next slide, on top of monetary policy, what really worked was fiscal. A lot of countries have done so much to help their economies, especially giving support to small and medium-sized enterprises, which I think is a first in recent history in terms of magnitude. So there were handouts to the most vulnerable in some countries. There were a lot of use of partial furloughs, but there was also a lot of liquidity measures to the firms. So, for example, state-backed credit, but also moratoria on fiscal and social debt from the firms to the state. We've seen also some countries being a bit smarter and trying to build a bit the equity base, so to recapitalize some companies because of the risk of higher indebtedness. All of that is happening, and of course this asks also some of the questions of what type of world after COVID we're living in. You know, that this crisis is very Darwinian. So those companies that entered the crisis with already quite some issues, they are, you know, only supported for some of them by public support, and some of them are on the verge, unfortunately, of closing down. And then other countries have benefited from public help, but they were already quite good, very rich cash-wise, and those companies are now, you know, have to unleash their investment. On the public side, indeed, we all going to have to discuss the fiscal rules. You know, in Europe, apart from, you know, I think no country today are respecting the so-called Maastricht criteria, 3% deficit, 60% debt to GDP. And I think by 2030, only Germany and maybe Ireland will be within those rules. So the other countries won't be. So we need to change our thinking about public debt, especially realize that the level doesn't matter as much as making sure you can cover your interest rate service. And this is also a question, of course, for some of the large, you know, countries in Africa, which have used fiscal a bit less, I would say, than in the Northern Hemisphere. But for some of them, they use that on top of an already quite burdensome, I would say, public sector. And you've seen, for example, countries like Zambia defaulting, and there are a few countries on the continent whose financial stability situation is a bit concerning to us, and we need to continue to look into that to see what are the consequences for those companies that are located in these countries. If you go to the next slide. You know, because, you know, maybe I have a bit of a bias, I always look at insolvencies because that's what I used to look at when I was at Euler Hermes. And 2020 was quite puzzling because of all this support and the fact that we paused the world. We have seen very few insolvencies compared to the amount of the recession, which is the worst one since the Second World War. So we expect credit risk to stay a bit hibernating in the economy. And this is something that is quite important for companies to understand, which is today, because of the massive support from the public sector, because of the actions by central bank, we don't really know how much is the price of an airline ticket. But we don't really know how much is the price of credit risk. And this is something that, as you know, in the insurance sector, we're very concerned about when the determinants of the price of risk are not clear to us. And so I believe we need to be very careful and very vigilant on that front. Right now, a lot of companies are under life support by the governments. A lot of companies are trying to innovate. Look at the restaurants, the hospitality sector. Some of these sectors are the most affected by COVID. Restaurants, hotels, retail, transport, recreational events. Those sectors are trying to make means, you know, or at least trying to survive. But to a certain extent, it's not easy because their turnover, their revenue has really fallen deep. So we expect credit risk to gradually step up as we unplug some of the support from COVID. And so that means that we have to particularly be vigilant. I give you a number that I always found, you know, fascinating. In Africa, 75% of companies pay cash in advance. They don't have 30, 60 days of delays of payment like you can see in Germany, for example. As a result, this is a big financing constraint, you know, and this is going to be a big financing constraint for years to come, not to have access to good working capital financing. And if we were just to have better financial information on the African continent, and if we were to trade on average at 30, 60 days, this would unleash the equivalent of the GDP of Tanzania. So 40 billion, right? And this is something that is for us very important to keep in mind, because this credit risk is going to be on top of the agenda for the CFOs for at least the next year. If you go to the next slide. This is a mapping of the sectors. I know most of you are from very different sectors, and this is what I call this really Darwinian crisis, and even this K-shaped recovery. You know, this is very different from where you are in the supply chain. If you're close to the consumer, if you're upstream, if you are affected by the commodity price uptick, if you are more affected by the administrative lockdown. And so we see that this is very important to understand the mapping, because the risks are very different from one sector to the other, and the solutions that can be designed for the sectors are very different between sectors that are already on the recovery side. And think about construction, which is very important for most of the economies, and the construction sector is holding strong compared to, I don't know, airlines or retail, which are going to take a longer path to recovery, and so that require different type of support from the financial intermediaries especially. If you go to the next slide, this is the Africa outlook, and so I leave the floor to Céline.
Hi, good morning, good afternoon, everybody. First of all, I would like to thank the organizers also for making this event possible. After the intervention of Ludovic, I guess you have a clear view of what's happening in the world since the COVID disease has started and what's next. Now I will rather insist on what's happening on the African continent for the next 10 minutes. So as Ludovic also said, the second wave of the pandemic is quite difficult in Africa. It's even more severe than what the continent experienced last year. So sanitary crisis is worsening because of the new variants of the virus that spread quite faster. But the good news is, as also Ludovic said, we now have vaccines. The only issue is to make them available for everybody for the African continent. So that requires a big, important cooperation at the international level, because the current availabilities through the COVAX facility would not be enough. We're talking about 20% of population to be vaccinated, and this will not be enough. And I can never emphasize enough that we cannot talk and envisage a global recovery in 2022 if the African continent is still struggling with this disease. So this is why we need to come together, especially the President Macron has also recently called that the Europe should make available the type of vaccines that that protect against the new variants of the virus in Africa. Also for the governments, as Ludovic said, currently the best investment is investment in vaccines. So the African governments that still have the means, the fiscal space to spend, they should spend on vaccines first, and then in other expenses like infrastructure building. In my next slide, I show you that the crisis, the COVID-19 crisis, the health side was quite mild in 2020. However, the economic damage of the crisis was unprecedented. So the African GDP was cut by 4% in 2020, and this was way worse than what we saw during the great financial crisis and also during the commodity prices slump in 2015. But what is very important about this crisis is the importance of, is the key role of having a diversified economy. As the title of this event is Resilience, I would like to attract your attention that the most resilient economies of Africa already in 2020 were the ones that were diversified. Here I think about Kenya, Tanzania, Senegal, and also Ghana. Those economies were more resilient, and also they are likely to grow faster, to rebound stronger in the next 2 years. On the other hand, you can find the commodity exporters. Here I think about Angola, Algeria, and Nigeria. They were hit very badly with the crisis, but also the perspectives are also more sluggish. We expect a sluggish recovery. The simple reason for this is that the oil prices may not fully recover, especially having in mind that declining appetite for fossil energies all over the world. This is why it is important to diversify. And just to give you an example, for instance, take Nigeria. It's a huge economic power, and 90% of Nigeria's exports are oil, and since 5 decades. So it's really time to think about developing Made in Africa and diversifying the industrial sector in Africa. The key challenge arising from this crisis is how to boost growth if you have barely no fiscal space. Ludovic just showed us the slides and the size of the stimulus, which is massive in the US and even China and in Europe. And there's less fiscal space in Africa, but also before the COVID-19 crisis, already debt sustainability was a big issue. On the left-hand side, you can see that over the past decade, countries like Angola, Zambia, but also Tunisia and South Africa built up very fast public debts to highly sustainable levels. We welcome the initiative from G20 together with Paris Club for the debt relief, but we don't think that that initiative will be enough to tackle the debt sustainability problem, especially when it comes to commercial debt, private creditors. In 2022 and 2023, some countries will have big, very important needs in rollovering debt, and for this they would need to attract investors. And the good news is, as Ludovic showed us, because of low interest rates in developed countries, there is appetite. So there is risk appetite from investors to get more yield. But the problem, the investors are likely to be more selective. They will look more in where to put their money. This is why it's very important, it's very key that governments pursue the right policies to establish a predictable business environment, and also having fiscal discipline and monetary policy predictability and credibility. Here, I mean, in the context of COVID, take a country like Maurice with great fundamentals, very good investment climate. And even in that case, the direct financing of central bank to the government is an issue. So it's now time to think about unplugging this non-conventional measures that central bank had to step in, but now it's important to unplug them to create a predictable environment. Also, governments should retain from policies like capital controls or very strong interventions in the exchange rate market to keep a predictable and favorable environment for investors. There's also lots to do in the policy front, even though fiscal space is limited. For instance, in better revenue collection could be a good avenue to take, because when we look at numbers currently in 33 countries in Africa, the the tax collection to GDP ratio is below 20%. And when you take Nigeria, this ratio is even below 10%. So there's still a lot to do also in improving the regulation to make more attractive private-public partnerships and to attract more foreign direct investment. So one of the main scars of this crisis was on the external side. We had very strong external imbalances to build up, liquidity shortages as well. On the left-hand side, you see countries like Zambia, Angola, Ghana, Ethiopia had experienced strong exchange rate depreciations. Also, some central banks tried to contain the erosion of the exchange rate. So that translated into erosion of the international buffers and FX reserves. So here we have Angola, Egypt, Nigeria, Kenya. They lost important international buffers during this crisis. And also inflation came back. So inflation was tamed over the past years in overall the continent. But now currently in 2021, we have double-digit inflation in Angola, Ethiopia, Nigeria, Zambia, and Ghana. And inflation can be a destabilizing factor because it's simply eroding the purchasing power, the living standards of the poorest. Regarding international imbalances, we think things will go better automatically with the recovery. I mean, remittances will increase, global demand is already stronger, also FDI flows will come back, but still what we think as a game changer, as also Ludovic said, is the continental free trade area in Africa. This free trade area, it will enable to more than increase the trade to by 50%, more than 50% within Africa. But what is important to us is it will create another big regional bloc. It will be Africa, and which could negotiate its own bilateral trade deals with other big blocs, like take it the US, EU, China. So it will empower Africa in a very key way that Africa can finally act as a bloc. But still lots to be done. Of course, now we eliminated the tariff barriers, but non-tariff barriers are quite important. So it's a quite long way to go to build infrastructure, to ensure good power supply, but also to eliminate all kind of regulatory administrative barriers and power on all the paperwork. This is my last slide. Job creation is the key challenge, the key issue to grow out of this crisis, because the COVID-19 currently eroded 2 decades of progress in poverty reduction. And given the current demographics of Africa, next decade, 44 million young people will join the workforce. So how do you do if your fiscal space is that limited? How do you create these jobs? So to do so, what will be key is improving access to finance and better financial intermediation. And currently what we see in large countries like South Africa, Ghana, also Nigeria, Egypt, the banking sector is crippled under the burden of non-performing loans of state enterprises, especially in the energy sector, but also in cocoa sector in Ghana. So the first thing to do is to clean up this debt, to free resources that can be allocated to the private sector, but also at a smaller scale. If today you look to small and medium-sized enterprises or very small enterprises, they say they only have access to 15% of finances that they need to continue their activity. So they have not enough access to finance. And what we observe from the success story of East Africa and also Ghana in digitalization, this is a game changer. Digitalization, having access to mobile money, mobile services in these countries enable millions of population, unbanked populations in rural areas, but also in informal sectors, to have access to microcredit. Sometimes it's just $1 credit coming from your cell phone, but to have access to credit and to generate income. So we should definitely pursue all investment in digital services, which will help to sustain private sector and generate more jobs. So I will stop here and I will be happy to take your questions afterwards.
Thank you so much, Ludovic and Celine. Very good insights. One of the insights I took away, what you mentioned, Ludovic, was the best investment for 2021 is vaccination. And also, Celine, you mentioned the fact that for an economy to rebound faster, it has to be a diversified economy. So those are some of the takeaway points. Due to time, I won't share a lot of the notes. I know you also made some notes and you also have some questions. Please do use the Q&A function. It's on your screen, on the bottom right of your screen. You'll see it just there. Type in your questions for Ludovic and Celine. They can't wait to answer your questions. Now we're going to move on to the next topic of our agenda. And right now we're going to talk about the results of the 10th Allianz Risk Barometer. But for us, before we introduce the topic, before Senzi takes over, we would like to show you a short video. Please sit back and enjoy. Excellent. I trust you enjoyed that video. And just a brief background about the Allianz Risk Barometer. It is an annual survey that we have conducted for the past 10 years. In essence, what we do, we ask CEOs, risk managers, brokers, clients, insurance experts, and we ask them what will keep them awake at night in the next 12 months and beyond. And if you think about the number of respondents that we received in 2021 survey, it was a record of 2,769 in over 92 countries and in 22 industry sectors. It is quite clear that when you look at the outbreak of the coronavirus in 2020, it's no surprise that, as we all know, that a lot of businesses are shut down, and the impact of the virus in terms of business interruption. And it's no surprise that we have the COVID trio, the top three, which is the pandemic outbreak, business interruption, and cyber. On pandemic outbreak alone, it is never featured in the top 10 risks. It's the first time ever it is featuring in the top 10. It actually climbed up 15 places globally. And in Africa, it is the #1 risk. Second is business interruption. And third, like I said, it's cyber. It's quite clear that when you look at the top 10 risks, even the top 3 risks, that they're all interlinked. That we are seeing that there's growing vulnerabilities that in a highly globalized world that is interconnected, that one incident in one area can rapidly spread across the globe and have devastating effect. Now, we know that companies now need to prepare for even wider range of business interruption exposures outside of just pandemic. And then now companies have to think of extreme events that could actually impact their operations. Companies need to build, obviously, stronger resilient supply chains so they can manage these future risks. At Allianz, we have named the top three, these top 3 risks: business interruption, pandemic, and cyber, as the COVID trio. But to give us more detail about this COVID trio, I now welcome on your screens Senzile Ndlozi. Over to you, Senzi.
Thank you so much, Susan, and good afternoon to everybody, and thank you for joining us in this webinar. Before I go into the COVID trio, we thought it would be opportune for us to share the most important business risks in Africa, as well as the Middle East, just before I go into the COVID trio. So the first of which, and Tusang has mentioned it right now, is sitting with 36% of our respondents are saying that their #1 most important business risk right now, as at 2020, is pandemic outbreak. And what do we mean by pandemic outbreak? Essentially, we're talking about the healthcare and workforce issues we're currently facing, the restrictions in movements. We've got the lockdowns that are enforced by governments that are really restricting our movements from a business perspective as well as a personal perspective as well. Tusang has also mentioned that pandemic outbreak is a #1 risk in the continent, but also it's just for it to come up to sit at #1 this time around is a great reflection of what's going on in the world today. It has never made it past number 16 in the past, and yet today it shoots up all the way to #1 and takes down business interruption, which is sitting at #2. So yeah, it has really been one of those risks that has been greatly underestimated by both business and people as well. As I've mentioned, in 16 countries, it is sitting at the #1 risk, and in the top 10 in over 35 countries. So pandemic outbreak is something that we all anticipated to shoot up, but we did not expect it to be sitting at #1 right now. At #2, we've got 36% of our respondents of the survey. They've said to us, guys, we believe that business interruption, including supply chain disruption, is a big issue for us as business. It is 2020's #1 risk, but it's come down this year, taken down by the pandemic outbreak. And then if you look at #3, with 33% of our respondents, we've got cyber incidences, and that is the cyber crimes, IT failure, outages, data breaches, fines, and penalties. It's sitting at #3 in our survey. It was last year's #2. Now, the interesting thing about cyber is that in 2020, as of April, the FBI reported a 300% increase in cyber incidences, just as we went under lockdown. So you can imagine the cyber hackers are ready, they are well organized, they are prepared, and they're even funded. And you're getting currencies such as crypto, which sort of become enablers as well to ransom payments. So yeah, number 3, we've got cyber incidences with 33% of our respondents. I won't go into all the detail, especially all the risks here, but what we will do is we will share with you the Allianz Risk Barometer survey, the report. It's about 30 odd pages. It makes wonderful bedtime reading for those of you who are interested. Next slide, please. So, in terms of just to bring some highlights for you, the top 3 risks that we currently have right now are all interlinked in the Allianz Risk Barometer. The first of which is business interruption, and the second is pandemic outbreak, and the third is cyber. Tusan's mentioned that. They are all interlinked because what we picked up is that many countries and businesses were massively disrupted when COVID pandemic happened. In terms of business interruption at a global level, it is the #1 risk at a global perspective. And the interesting fact about business interruption, including supply chain management, is that we've done the Allianz Risk Barometer survey for 10 years. And out of the 10 years, 8 times business interruption has come out as the #1 risk. Number 2, pandemic, again, the biggest climber in the Allianz Risk Barometer, jumps up 15 positions, sitting at number 2. This can be expected. It's sitting at number 2 at a global level. And then for number 3, we've got the cyber incidences. Again, very topical issue. And I believe in insurance, we've been talking about cyber for many, many years. And with us now remote working and heavily being reliant on our IT systems, cyber has become an even bigger issue for business. And I will share more detail as we move along in the slides. Just a quick one. For number 4, we have market developments and changes in legislation and regulation. These essentially make up the top 5 in the Allianz Risk Barometer. Next slide, please. All right, the COVID trio, business interruption, pandemic outbreak, and cyber. Very interlinked, very connected, very interesting risks. What does this tell us? Why are they in the top 3? Well, the first thing is that Tusang has mentioned this as well. We live in a highly connected world. And because our world is so connected, it has introduced so many vulnerabilities, and the pandemic outbreak has demonstrated that. What we've seen now is we become highly digitized. A lot of us are working remotely from home. We're having this wonderful seminar right now, all in the comforts of our own home. It's just showing how reliant we become on technology. Also, a lot of businesses are using online sales, and some of them, their supply chains are heavily reliant on digital systems. So what has happened is that with all of this reliance on technology, it creates vulnerabilities. One of the other elements and factors which we need to consider as well is the economic consequences of the pandemic. I think my colleague Ludovic has alluded to it earlier that we foresee a lot of civil unrest as a consequence of the pandemic. And that comes in the sense of job losses as we become more technologically inclined. That comes in a form of insolvencies. I think Celine mentioned it, with companies going insolvent, people losing jobs. And another option to be considered as well is the reskilling of staff. You know, now that people are we're now having to work from home, having to learn new systems, and you can only imagine the impact on the manufacturing side. So one of the questions we need to ask ourselves is, what are companies doing at this point in time in order to mitigate their risks? Companies are trying to de-risk their supply chains. They're trying to look at their business continuity management plans, and they're saying, what can we do better? In terms of de-risking their supply chains, companies are suddenly talking and thinking and exploring ideas of onshoring. You know, a lot of companies like to export, and I think Ludovic mentioned the exporting from importing goods from China. So companies are starting to think around, can we onshore our goods? Can we buy them closer to home? And another thing that the COVID pandemic outbreak did is it actually tested business continuity management plans of a lot of companies. And what they were found is they were found lacking. A lot of BCMs were not able to cope under the circumstances of a COVID outbreak. And quite interestingly, many companies had never really thought of an extreme event such as a COVID pandemic outbreak. So maybe theoretically they thought about, oh no, we could have a massive event that would happen, but they never fully tested their systems. They never measured the impact. They never really fully looked at everything from a cross-functional perspective. They never tested to see whether their businesses were dynamic enough to survive an extreme event. So one of the things that companies need to do now is to prepare themselves. They need to build resilient BCMs, business continuity plans, and also prepare themselves for different variations of extreme events, one of which is a large global scale cyber event. We don't know when it would happen, but it's a possibility. And businesses need to bring that back into their business and reflect and say, how would our business respond to such an event? What is our BCM plan? Can we recover? How do we continue? What is our business continuity plans? And then the other one I wanted to talk to you about was the natural catastrophes as well. I mean, just because we're not talking about it as much because everything is overshadowed by the pandemic, we've got the issue of a natural catastrophe. We still have issues with climate change, which again is another risk that businesses need to consider. Are they able to cope? The last one, which is also quite an interesting perspective, is businesses need to think about another disease outbreak. I just read an article recently over the weekend that another H2C1 virus has made the transition from animal to human. So essentially, in the near future, we should anticipate more diseases transitioning and moving from being animal kind of diseases to humans as well. So businesses need to prepare for that. Next slide. Okay. So business interruption returns as a top risk with a COVID twist. So when I read the report, I thought it was very interesting because I read the previous year's report, and in 2020, most businesses essentially were so concerned about business interruption, but their biggest concern was we are concerned about our businesses being interrupted as a result of a cyber event. But in 2020 and 2021, what has happened is that has changed. Most businesses right now are saying, yes, we're concerned about business interruption, but now it's a pandemic outbreak. So what is essentially happening is the number of risks that businesses must consider just grows. One of the questions that we asked in the survey was, which causes of business interruption do companies fear the most? And with 59% of our respondents, they said pandemic outbreak can be expected. The second one, again, as I've mentioned, cyber incidences, which was last year's #1. The third was natural catastrophes, and then fire, supplier failure, and economic sanctions. Now, with business interruption sitting at #1 with 41% of our respondents, there are sectors that believe that business interruption for them is their biggest or #1 risk. And those sectors are the chemical and pharma industries. We've got the retail, the wholesale industries, mining and oil, and transportation. We'll share this with you in the report, and it's very detailed. You'll get to actually see the top 10 risks for each sector. Next slide. The second one I wanted to talk to you about was the pandemic outbreak, COVID, a known surprise. I mean, COVID is not new to any of us. We're experiencing it right now. And in 2020, it is sitting at #2 with 40% of our respondents. However, in 16 countries, including Africa and the Middle East, it is ranked as the #1 risk. Sectors that believe pandemic is their #1 risk include aviation, which can be expected. The lack of travel, aviation industry has been massively impacted by the COVID virus. In fact, it's come to a standstill almost. And then you've got hospitality. We know about hospitality and that impact. Government is concerned, consumer goods, entertainment, media, that can be expected. What we do know is the interesting one I wanted to share with you was the marine and shipping industry. So what happened is last year, when a lot of the shipping and the containers were docked as a result of COVID, and government was enforcing lockdown regulations. One industry that was massively impacted by lockdown was actually the automotive industry. What happened is, as a result of those lockdowns and those shipping containers being unable to move from one country to the other, the entire world struggled and found themselves having a automotive shortage, parts shortage, because those shipping containers were sitting on dock. So one of the questions that we asked as well during the survey is, what changes do you expect to see from the pandemic that will impact your company the most? I think we've spoken about it. We've accelerated towards greater digitization. A lot of us are working remotely. We've got the growth in the number of insolvencies, restrictions in travel, increase in cyber risks, and more businesses being interrupted by lockdown. And this is happening. This is the current reality we're facing. Prior to 2021, again, I think we've spoken about this, the pandemic risk had never exceeded sitting at #16. It always was somewhere below, and yet this year it's sitting at #1 at a global level. Next slide. In terms of cyber incidences, this is risk is sitting at #3 in the Allianz Risk Barometer. We asked our participants, which cyber exposures concern your company the most over the next year? And yes, you can see with 56% of the respondents, they said data breaches. I mean, that can be expected, data breaches as we work from home, IT vulnerabilities due to increased remote working, that's noted, increased ransomware and attacks, I mean, that is also expected. One of the most interesting components about cyber is a lot of the time when we think about it, we look or we think about a hacker or a group of hackers hacking into your system, breaching your IT software, firewalls, encrypting your data, seeking ransom. But some of the other risks that companies face is essentially just employee error or systems failure or network slowness, as we've got there. Sometimes it's just an employee making a mistake and the system stops functioning. And you can imagine in the manufacturing space, if somebody makes a mistake with the IT and the whole process comes to a halt, it impacts your output, it impacts your revenues. So yeah, cyber remains a topical issue for many businesses, and it should become even more critical as we enter into the new world. So interestingly enough, cyber ranks number 1 in 12 countries in South Africa, including South Africa, Asia Pacific, and Europe, some European regions as well. In terms of sectors, we've got the financial sector, government, public sectors, public utilities, professional services, technology, and telecoms. These are the sectors that are saying to us, look, we believe cyber is our biggest exposure and risks. And just to reiterate the importance of cyber, it has become bigger now in the pandemic. Criminals are far more organized. We've got cryptocurrencies. Data breaches is a reality for many companies, and I've seen that the way in which the insurance sector is dealing with cyber has been very proactive, and we would appreciate your assistance if you're on the broking side to keep having these conversations with your clients, to keep assisting them understand this risk and bring it back as a reality, very much like a pandemic outbreak. I think maybe 5 years ago, many of us never saw a pandemic outbreak sitting at number 1, but here we are. And we're facing a pandemic, and it's no longer a theoretical concept. It has become a reality, very much like cyber. You don't want your clients to have a cyber incident and only then consider looking at it as a serious risk for many entities. The next slide, please. So I thought I should share with you the top 10 global business risk by country. Number 1, starting with South Africa, and I am not being biased here. We looked at the number of people who are attending this webinar, and we thought, let's put South Africa first. I could have put any other country. In South Africa, the interesting thing about it is that our number 1 and 2 risks are essentially the same from 2020 and 2021. Cyber and business interruption are number 1, 2 risks. We've remained flat. The new entry comes in a form of pandemic outbreak, which can be expected, as we've mentioned. The one thing I wanted to highlight as well is the 2 new risks that have crept up on the barometer for South Africa, and that is political risk and violence and the shortage of skilled workforce. Now, in terms of the political risk and violence, what's very interesting about that, I think it speaks to what my colleagues have mentioned prior, and Ludovic mentioned that as a result of the pandemic outbreak, we anticipate to see in the near future some political, some riots, some looting here and there, and hence why businesses are telling us, look, we are looking at political risk and violence as a risk for us as a business, and I think it's reflective of the status of the economy within South Africa. And then number 9, very interesting, a shortage of a skilled workforce. That's very interesting for me. We look at it from an insurance perspective, from a broking side, especially with the hard market cycle. You require a certain level of skill to broke accounts these days, and maybe brokers and even clients are feeling some kind of way in terms of the skills that's out there in the market. Next slide, please. The next country I wanted to share was Nigeria. Interestingly for them, number 1 is the pandemic outbreak. It's their new risk. It's come up historically. I think it was not even in the top 10, as I've mentioned. The second one is cyber incidences, also come up. It was sitting at number 8 last year. This year it's sitting at number 2. And then their top 3, their third risk is macroeconomic developments, monetary policy, austerity programs, commodity increases, deflation, and inflation. Very interesting. Their new risk that popped up in their top 10 is the loss of reputation and brand value. Example of public criticism. I think that's very interesting, insightful data. And I think there was a lot going on last year in Nigeria around October 20th. There was an issue in Nigeria as a country, received a lot of criticism politically, so businesses are picking up on that, and they're highlighting that, look, we are aware, we are concerned, and we need to manage our businesses in a way that we don't attract public criticism. Thank you. Then the next slide is Kenya, one of my favorite countries. Number 1, for them with Kenya, This is the first time they've participated in the Allianz Risk Barometer, so we don't have a comparison as yet, but we'll do one next year. So for them, number one is the pandemic outbreak with 56% of the respondents. They've got business interruption sitting at number two, and they also have market developments. They worried about volatility, intensified competition, and new entrants, mergers, and acquisitions. It actually speaks to something that I think it was Ludovic or Celine said about industries and economies that were diversified, and therefore they're able to recover quicker. And you can see that they're thinking ahead, they're thinking about competition, new entrants. They're not looking to other things. They're looking at market fluctuations and whatnot. And then, there isn't anything else I want to talk about. We can move on to the next slide. Next slide, thank you. The last country I wanted to share with you, also again, a new participant in our survey this year is Morocco. They brought in their number one as a pandemic outbreak, 58% of the participants. Market developments, also again, they're looking at intensified competition and new entrants. And then their third risk is business interruption. Cyber for Morocco comes in at number 5. And we anticipate over the next coming years that we'll see some of these risks creep up to the top 3 as well. I think that is essentially it on my side. Thank you so much, Susan. Thank you.
Thank you, Senzi. That was very detailed, and thank you for your excellent presentation. Now I'd like to hand over to Arthur. Arthur will provide a quick overview from an underwriting perspective. So Arthur, if you are ready, you can go ahead.
Thank you, Susan, and hopefully you can hear me okay from here. So
yes,
in the face of the trio risks that has been detailed, presented in a detailed manner by Sensile, I would like to actually offer an underwriting perspective, basically. And I think one of the legitimate questions when we actually see the rise and increasing of these risks, basically, is to find out whether the insurance industry basically can actually offer support. In these situations. And main observation is that so far, actually, the response from the insurance industry is actually limited, owing to the fact that when we look at pandemics, basically, and even cyber, we're actually looking at risks for which the ability of assessment basically is actually pretty challenging. And also another aspect actually is about the control or the monitoring of the accumulation that potentially actually arise from these risks actually. So from Allianz perspective and also beyond Allianz from a reinsurance industry perspective, I think we're concerned with being able to actually clarify the offers that we have now. In terms of actually making sure that to the customers it is known clearly what is actually covered and what is not covered in the incidents relating to the trail risk that we're actually looking at here. And from Allianz perspective, that's basically what we're doing with our cyber offerings, making sure that within our portfolio we actually eliminate all the silent cyber exposures, but also actually provide a proper framework whereby we actually give dedicated and intended, basically affirmative cyber coverages to the customers that will be in need of that actually. And we do that basically in collaboration with our AGCS colleagues through our One Allianz concept, One Allianz for Africa concept actually. And we work closely together with them from the technical perspective to be able to actually support our customers with offers that, tailor-made offers that actually support their needs actually. So also in terms of clarifying what is covered and what is not, basically, we look at pandemic subject, topic, and from our perspective, there is no appetite for affirmative covers when it comes to pandemic. So as such, we do actually bring clarity, and we actually did that over the recent renewal period. We did that with introduction of clear exclusions for communicable disease and pandemic-related claims, actually. One will also see that cyber and pandemics, I mean, literally most of the time actually drive into business interruption claims. And as a principle, the business interruption insurance coverages actually rely on the principle that the cover is given for claims that arise from business interruption following a material damage at the insured premises. That's the guiding principle, I mean, in business interruption insurance. But we've also seen that, let's say, relating to disease-driven claims, there's also some situations where we had to actually offer limited coverages for, I mean, such disease-driven claims actually. And in that particular frame, I would like to actually state and clarify that for Allianz, basically, non-damage, non-physical damage PI is very, very restricted and limited. And as such, basically, we consider special situations whereby, I mean, we would actually base our approach on known disease that are actually happening, manifesting within the premises which are actually insured, and whereby the operations actually will be cancelled or stopped by a competent public authority, actually, for that matter, and where also basically strict accumulation control is actually applied. At the same time, also, I mean, we seek to clarify that PI claims that actually follow, let's say, pandemic flu, SARS, MERS, and COVID-19 situations are, let's say, clearly intended to be excluded. So that's in a nutshell what I wanted to share. And maybe actually, I mean, alternatively to the insurance support or this insurance contribution, I would maybe suggest that government's solution maybe an area to look for, let's say, increase a solution for such a risk. Actually, we've seen with COVID also that some governments were actually supporting, let's say, the corporate private sector basically by some financing. I think that can actually constitute an element of solution that could be developed and increased basically, I mean, to support the economies and the countries basically. The other way of looking at it would be that you know, the insurance industry as a whole actually think about let's say insurance pools that would be dedicated to such risks as pandemic cyber. That's in a nutshell what I wanted to actually bring in the perspective from an insurance perspective.
Thank you, Artur, for that insightful presentation. What we're going to do now, we're going to shoot straight into the webinar Q&A. So I have a few questions. So if I could have all my speakers have their cameras on. You can be on mute, but have your camera on. Okay, now I can see you all. Great. So the first question I have is, what are the long-term consequences of COVID pandemic on risk management? I mean, this hit us by surprise. Do you think the risk managers missed something? Somebody wants to take that question.
I can take them because they're not my clients. No, I'm kidding.
Go ahead.
You know, I do think that, you know, when I see the Allianz Risk Barometer every year, when I see the World Economic Forum Risk Barometer every year, the problem is that, you know, it's a moving average of the risks that were on the front line of the FT of the year before. That's what I think, and which is very worrying. Not that, you know, it's in the world of risk, that's the big difference between, you know, risk and vulnerabilities. You know, risk is the combination of vulnerability and the hazard. And then, you know, you can basically break down the vulnerability in terms of pre-existing conditions and coping. And then you have a bit what the risk manager should be focusing on, because we never know when these threats actually happen. But we do know that we were very vulnerable to this, and maybe we didn't have a good plan in place, you know. What I think is interesting in the question is, beyond the fact that we missed it, whether we could miss other type of exogenous shocks like this. Of course, the frequency and severity of natural disasters. I saw the blackout question was number 10, the blackout risk. And, when I hear the scientists talk about the solar sunspots, and I see some of this, insurability frontier, where you have a bit of cyber, a bit of natural disaster, a bit of blackout, I'm concerned, right? But I think this is when the good consequences of COVID kick in. It has increased risk literacy across the globe. It has put the risk manager in a driving position in many of these decision making, because these type of operational shocks were always a bit on the back burner. You would discuss it quickly in the boardroom, but not as much. And now it is very central. So I think this risk awareness and risk literacy increase is actually very interesting. It's a long-term consequence of COVID. And then the second thing that I think, and there are many consequences, and maybe it's also too early to draw all of the lessons, but one of the big lessons that I draw for businesses is how differentiated the same risk can be depending on the sector of activity you're in, depending on your strategic dependencies on specific countries, on specific sectors, on working with the public sector, or being affected by decisions by the public sector. I'm very concerned about the public sector over welcoming its stay in life after COVID. And how do you put the public sector back into the Jenny bottle? I'm concerned about regulatory backlash, for example. So for me, this mapping those risks to future threats like this one, but having in mind that generic risk mapping doesn't work. It is so customized that you need to have a good understanding, for example, of the cash position, of your liquidity management measure. In the future, currency risk hedging are going to be very important. Senzi talked about those market legislation being down, close to 8 or number 8 or number 9 rank. This is going to be very important to me, and I think it could be a bit in the blind spot. So having the in-depth diagnostic, but also starting to take some actions to diversify, and to maybe transfer some of the risk, build in some captives for if needed as a first level of risk management, transferring some to the insurance sector, and then working with the private and the public sector to build these shields for this large risk is going to be what is going to keep us busy in the next 5 years when we're going to try to build back better after COVID.
Yes, it was going to keep us busy in the next 5 years. Thank you for that answer, Ludovic. And my next question is comes from J. Justice Tobachale. We call him JT. It says the Allianz Risk Barometer in the past studies, cyber has ranked in the top 3 risks, if not number 1 consecutively. However, this has not translated into increased demand for this product. What do you think are the limiting factors for this low take-up on cyber product? Maybe Arthur, you want to take that up? Why is companies not buying enough cyber or cyber policies?
Sure. Thanks. So, I mean, like I said earlier on, I think these risks are actually developing in the face of, the, let's say, increasing digitalization and let's say companies also trying to actually upgrade their IT systems and things like that. So I think this demand would actually increase with time. But at the moment, basically, I mean, we're not seeing that much of it. I mean, as part of let's say what we actually see on the day-to-day basis.
Maybe linked to that, it's another question saying cyber risk is put 3rd position, and in 2021, knowing that each year IT security becomes more resilient. Maybe Sainz, do you want to touch on that one? Why is cyber risk? Did you get the question?
Yep. So
okay.
my answer to that is, firstly, to JT's question, why is the low uptake? They aren't necessarily limiting factors. It's just disclosure. So many companies don't necessarily disclose when they've had a cyber incident. So people just don't know or are not well aware of what is going on in terms of how many cyber incidences are ongoing. So companies are not able to measure and ascertain their risk or exposure. So that's the one factor. The other factor is that if you look at the numbers, and I think I've mentioned it in the Allianz Risk Barometer, is that the FBI reported a 300% increase as of last year, 1 April, in cyber activity alone. So essentially, there is a lot of activity that is not being disclosed. So we don't know what's going on, and therefore companies don't think they have the exposure. From an economic perspective, again, if there's an estimated $1 trillion in losses, there's money being made by somebody out there. It's just that people are not aware, and hence why there's this issue with uptake and buying it, because they think it's something that happens somewhere else and not necessarily in their country and not within their business as well.
Thank you, Senzi. Then I think this one is a question for Dr. Celine. When can we expect a real economy restart in Africa, and in what conditions?
It's very difficult to say exactly when the real economy will restart, because all depends on the evolution of the sanitary crisis. But based on our scenario, if everything goes as planned, the world economy will go back to the pre-crisis levels by 2022. But under what conditions? This is the important part for me. So let's suppose that the sanitary crisis is under control. We reopen all these services, also tourism services as before. We will be in a different world. Already the risk part is very interesting, that all my colleagues gave us great insights. But I would like to insist on the other dimension, which is there will be less state power as a growth engine in most African countries. So Africa will need to rely on its own resources, own power, more than ever, to create that made in Africa products, to industrialize, and thanks to that free trade agreement, to grow from inside. And secondly, it's possible that there will be less China in the world after COVID. And there are a few reasons for that. Already China is much more inward looking and going for a dual strategy. So we expect China to be less present in terms of already debt, in terms of lending to Africa, but also investing in huge infrastructure projects. So there will be less China, but Chinese demand will be there. Chinese recovery is stronger than any other country. So there will be demand from China for natural resources, but we expect less financial support from China. And the third element, which will be different, is perhaps there will be more America in the world after COVID. And it's not very hard to do so, because during President Trump, the relations between Africa and US were not that strong, say. So let's see the new strategy, new Africa strategy of the Biden administrations. But I'm sure there will be lots to win from both sides. The African market is very interesting for US, and also the natural resources that Africa can offer are very interesting. So let's hope perhaps a free trade deal between the African bloc and the US, and we can see new infrastructure investment coming from the US for renewable energies, for digitalization. So there will be a new world, and the players, the cards will be distributed, reshuffled, and with new players gaining more power.
Thank you, Doc. I think the next question is related to the vaccination progress, maybe the lack of that in Africa. You talked about that the best investment for 2021 is vaccination, Ludovic. Now, what are some of the risks for these delays in vaccination for Africa? What are the risks if we delay vaccinating as quick as possible? Thank you.
I mean, there are three risks, right? The first one is the costs, the sheer costs. I told you in France, my country, it's 3 billion per week of delay. Why? Because you have confidence levels that are low, so people are saving instead of consuming. And why? Because you have state support measures that you need to keep in, because as long as you don't vaccinate a relatively good share of the population, you have to keep some form of lockdown or curfew or stringency, right? The second risk is vaccination passports, bifurcation, dichotomic recovery. If I'm South Africa or if I'm Morocco today, a lot of my business is tourism. If I don't get a high enough level of vaccination, I won't get access to the tourism bounce back. People will go to countries where, for some sectors, for some activities, for clearances in entering the country, you will need a vaccine passport. And so you don't want to be on the wrong end of the vaccination passport strategies. I don't know how much and how fast people will resort to this type of measure, because it is very discriminating, because it is a nightmare, because there are so many, third-party certification issues and implementation issues. But just look at the numbers. Today, the UK just announced, yesterday, the UK announced their the road to freedom with a plan to reopen the country. Today, the number of booking on airline tickets went up 4,000%. And they will be going to countries that have a high enough level of immunity, as herd immunity is measured or as vaccination rate is measured, right? And the third is, and this I think about tourism, but think about all the other sectors. What type of activity will not be under some form of restriction if you don't have the same vaccination, I would say, initial condition, right? And the third risk is one of resurgence. For me, there are tons of reasons, again, why some countries in Africa have been less affected. People mentioned weather, how youth the population is. It could be genetic predisposition. It can be just the number of contacts, just the way people behave when it comes to distanciation and so forth. Living outside, nobody knows. But what I know is we're going to have to learn to live with the virus. It's an endemic virus. So you don't want to be in a situation where your country is in the headlines for being yet again a cluster. So we need to organize ourselves, because if, for example, in Europe, and sorry to be long on the answer, but in Europe, we have the case with I see you, Tusang, I know you, so I know my answer is long. The example of Portugal in Europe is very interesting. Portugal is late to the second wave. As a result, everybody is concerned, because as the other countries are going to reopen, Portugal is going to have to close down. And this is a very touristy country. And this is a country that will have to spend a lot of money when everybody is going to start tightening the funds. So they're worried to be a laggard in the pandemic. This is going to be the same with some of the African countries. If you're a laggard, everybody is reopening and then you're closing again, the cost will be double than when everybody was closing altogether.
Great point. We don't want to be laggards. So in closing, this is a critical question, because we've got a lot of clients on the call, and they want to know, what can we do to build resilience? Our webinar is about resilience through COVID. So what can be done by African corporates to build resilience during this period? So I'm going to start not with you, Ludovic. We're going to start with Senzi. Then we go to Arthur and Celine, and then we'll close out with you, Ludovic, with your final thoughts. So I repeat, what can be done to build resilience by African corporates? Senzi, in short. Okay. Thank you.
I would say is to find your alternative suppliers, just to make sure that your supply chain isn't disrupted. 2, diversify your business. 3, as very much my colleague has mentioned, try and self-insure where you can, and then transfer the risk afterwards. Those are my 3.
Thank you, Senzi. Arthur?
Yeah, from my perspective, I think one of the things that have been really tested with the corporates on the continent has been the business continuity plan. So I think that's one area that companies should actually invest more effort into to actually build their resilience.
Thank you, Arthur. Next is Celine.
I think it's being forward-looking and trying to guess from where the next crisis or next risk will come. Like, as economists, we never success in predicting financial crisis, because all the time the reason is different. At a company level, in the same way, trying to be aware that the next crisis, next tension can be from a risk that has been overlooked so far. So keeping always the sensors open and try to sense those new risks.
And last but not least, Ludovic. Thank you, Celine.
I think resilience starts with people. So, you know, price diversity, make change as the default, take a collaborative system view on everything. You can set up as many departments as many risk mapping, but you need to change the mind. People, everybody, every unit, every human capital unit needs to build this resilience. And this goes with making sure the right questions are asked, the obligation to dissent, and then taking collective actions in the face of complexity. Collective intelligence is the only answer, unfortunately, or fortunately.
That's the shortest answer you ever given, Ludovic. Exciting. Thank you so much, everybody, for joining us this morning, this afternoon, depending on where you are. And a special thanks to our special guests, Dr. Celine, Ludovic, our chief economist, Arthur and Senzile, for great, insightful presentations this morning, this afternoon. And I think that's all from my side. Also, before I close, there's a lot of technical people behind the scenes, Miriam, Olivia, and Catherine. Thank you so much. I hope you had a great time with us. We look forward to hosting you at our next webinar. And for all the details that we spoke about this morning, the report, these will be sent to you via email after the session, and they're easily available on the Allianz website as well. Thank you so much. Have a great afternoon and morning, and see you next time, and goodbye.